Markets now. I'm Michelle Rook along with Chip Nellinger with Blue Reef Agri-Marketing, and we're seeing lower prices in everything but cattle futures today. And as we move through the mid-session, funds have really hit the accelerator button here in all of the grains. And, talk about what are the reasons that we're seeing it, Chip, and when is it going to stop?
Well, I mean, that's the question, right? I mean, it is ugly. The funds are definitely pushing the accelerator on the short side here. And they can do that in the short run. There's just not enough buying underneath of us. The funds, I think, have a mentality going back to this most recent USDA crop report that carryout's building. We're going to hit 181 and a half bushel national average yield in corn and 52 on beans. We're transitioning to El Nino, and that means we're going to have perfect weather. And there's no risk premium in the market right now. So the funds have definitely been in control. The momentum is decidedly lower, very ugly, just hard to watch. But I do think they're getting it stretched about as far as you can to the downside in here, especially in the case of corn. Now, the bean market's a little bit scary because they're just now getting out of their long position, probably don't have much of a short position built up in beans. And if they want to hit the accelerator and build up a 80, 100,000 contracts short in the beans, we might have 60 or 80 more cents to go in the short run. But I'm not sure that the market's looking very far ahead and looking where we're at on the calendar saying, hey, it's one thing to write it on the May crop report. It's another thing come October, November to actually realize record yields. I think we're a long ways from that. No risk premium built in. So you're getting people kind of on the wrong side of the boat. And if we get any bullish spark, we could come roaring back very quickly. But right now there just isn't one, and the funds are in control on the sell side aggressively.
Okay, so we have taken out the $5 mark in December corn futures. How much lower do you think we have to go there to price in the 2.22 billion bushel ending stocks figure you mentioned from the WASDE report?
Yeah, honestly, I think we're probably getting close in the case of corn and beans. From a new crop perspective, we're probably pretty fairly priced. We don't probably have to go a lot lower. If we're going to go lower, I think it's going to be in the old crop, the July contract in corn, July and August in beans, as the spread blows out. The bull spread has been so prevalent here for, really 18 months. And so if there's further weakness, it's probably because the funds just take the front end, the July contract, continue to hit the accelerator on the sell side. They exit the bull spreads, and that actually could probably support the new crop at or very, slightly under where we're at currently. So I think we're getting pretty fairly priced fundamentally on the new crop. The further pain might be on the old crop if they continue to liquidate.
Although you do have farmers that are going to argue with you and say, look, we've got basis levels that are still very strong out in the country because of the tight old crop situation. New crop isn't in the bin yet. And we've got acres up in the north that are not going to get planted. And so there are some bullish things we should be trading, right?
Oh, absolutely. I'm in that camp too. I mean, the farmer wasn't selling $7 cash corn. There's not much left. And after a dollar break, we're not going to increase farmer movement. So the basis is going to stay strong and get stronger. And to your point, again, it's one thing in the May crop report to, have a massive carryout in a, 92 million acre planted acres and 181 and a half bushel yield. I would point out that's 3 bushels better, higher than we've ever raised. And you're likely going to shave at least 1 million acres out of North Dakota, maybe more. And so if you take 3 bushels off a yield, which is still a record, take 1 million and a half acres out, then it's a much different scenario. But the market isn't worried about that right now, but they might be in the near future.
Demand is also a problem here. You look at weekly exports this morning, marketing year low for both corn and wheat with cancellations in both categories. And so that's the other part of it. How low do you have to go here to start stimulating that demand? Because that's the other benchmark, isn't it?
Yeah, for sure. That goes right along with it. Demand is horrible. I think we're pricing that in, but it's hard. You can't deny it. You look at this morning and it's negative across the board. I would say one thing. Typically this time of year on the calendar with, the influence of the Southern Hemisphere, particularly Brazil, exports aren't very good to begin with. And so that's just exaggerating the problem. The way beans acted earlier today, we were sharply lower overnight. They had that quick 20, 25 cent rally off the lows. That to me says maybe somebody's bottom picking. I wouldn't be surprised if you don't see the next day or two, an announcement of some fresh sales on beans. I think that the commercials are buying this on this break. To your point earlier, still tight on old crop. Basis is only getting better. And so to me, that says that maybe, yes, the funds are in control and it's negative right now, but it wouldn't take much. And the other shoe could fall on this thing and we could snap back just as quick as we dropped.
So obviously the implosion in the wheat market is not helping corn or beans, but wheat, certainly the Black Sea Grain Export Initiative being extended is part of that negative, bias that we're getting over there. But I'll have to argue, you're looking at Kansas wheat crop yields that are 20-year lows on yesterday's report, yet the market is going the opposite direction. Why?
Yeah, it's a little bit of a head scratcher. I think in the simplest terms, we might have a little bit of buy the rumor, sell the fact
By the
type
rumor.
trade going on, right? This wheat market, Kansas City especially, has rallied, I don't know, $1.80 straight up without much of a correction. You got the confirmation from the wheat tour that it's a horrible crop. But it looks like it might be in the ballpark of where the USDA pegged that crop size. So I think it's just a case of good old fashioned, we factored in some bullish news. We've had $1.80 move, and we're going to take some profits on the Kansas City market. And by the way, correct the Kansas City Chicago wheat spread a little bit. I don't think you can rule out higher highs yet in wheat, but we may have to go through a little bit of a profit taking liquidation here. And I don't think the corn market the last 2 days has helped the wheat market either, and probably spurred some of that profit taking in the Kansas City market. But I'm not sure that we've seen the highs yet because it's just an abysmal crop out there.
I'm with you on that, though. I thought of that buy the rumor, sell the fact there as we went into that crop tour, if that was going to happen. And to your point about the spreads, what we widened those out to like 260 yesterday between Kansas City and Chicago, which is historically wide, right?
Yeah, I believe that's an all-time high. If it's not, it's close. And so the market's doing what it needs to do. That's telling you there is a definite problem. That doesn't go away overnight, and that the size of that wheat crop is going to hang over this market for a while.
Sure.
We're going to really struggle to find high protein wheat, and eventually, I think eventually that means that the funds will eventually come out of their short Chicago position and give us a rally somewhere down the road that could also drag the corn along with it for a certain extent.
Yeah. And I know it's very thinly traded, but Minneapolis, we are not going to get all those spring wheat acres planted either. So that story is still coming in terms of what the market has to do with that. Okay, let's talk about the cattle market. We are seeing some support in the feeders, some new contract highs in the back months, lower corn helping out there. But are the live cattle futures trying to price in some better cash trade this week, or what's going on?
Well, it appears that way, and it does look like we're going to trade better. I think a couple things going there. I've kind of been watching these cattle pretty closely intraday, and every little break you get, it's not very aggressive. It kind of flutters around, and then by the close, it rallies. To me, the charts look like there's some further upside. You're coming in within the next couple of weeks of your normal seasonal low. I saw the midday boxes were up,
Right.
and it looks like cash is going to trade higher. And feeders, because of the huge puke in the corn market here, are skyrocketing. So from the feeder fat perspective, you've got to keep these deferred live cattle going, or you're going to have massive losses on the fed cattle market here eventually. And so I think that the feeders are helping. I think higher cash is going to help this market, and the cattle on feed should be somewhat friendly when it comes out here later this week as well.
Yeah, placement guesses right around that 95%. And so that should be, like you say, friendly. Hog market setting back there, is that just the futures premium to the index? We just don't seem to be able to make too many. We can't get any momentum, is what I'm trying to say. It seems
We
like
can't. We can't. As much momentum as we have on the cattle side, we just can't seem to turn the corner yet. It's getting time on the calendar to start seeing some better cash and cutout values. The market's trying, but it just can't follow through on any rally. So very disappointing. We still have that, deferred premium, and every time we rally, that just gives the funds another excuse to sell this market. And so they're getting, a big short position built up. We just kind of like the corn market. We just lack the bullish spark right now
right.
to turn this market for higher into summer. It still could come, but it's just a slow ride. And right now, the funds are getting paid to sell every rally. Hopefully that changes once we turn the calendar to June here in a couple of weeks.
Yeah, you're right. We're lacking a bullish story in a lot of the ag commodities except for cattle. All right. Thanks for joining us, Chip Nellinger, Blue Reef Agri-Marketing. That is Markets Now. All right. Well, Mike must be asleep back there or
We
something.
put Mike asleep.
I don't know.
He's taking a coffee break.
Do you
Okay.
want? Are you doing Ag Day? That's what I was waiting for.
No, that's at 1:30 we do that.
Okay,
Yeah.
sorry.
Yeah, now you're going to make me edit this dang thing.
Well,